This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Friday, December 19th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here at March corn down a half at 444. January soybeans were down a penny and a quarter at 1051. And March Chicago wheat was up a quarter at 508. This morning we had an export sales announcement of 134,000 metric tons of soybeans, and that was to China for 25. Feels like we're still grinding into holiday markets here, guys. Open interest dropping really across all sectors. We've got overnight week Chinese bean auctions. Their first auction went about 60% of the amount that they put out, and the second one was about 32%. So not a whole lot of domestic demand there on the Chinese side as they look to free up room for the intended purchases that they've made here through the U.S. So with that, Dustin, maybe share a few thoughts here as we go into the end of the week, and then we'll throw around the room.
Yeah, thanks, Dan. Yeah, if looking at the corn sales, just kind of want to highlight, the top 6 years of corn sales coming into this week. This week would be, November 27th is our most recent report. So everyone's really excited about corn sales, and for good reason, right? The yellow indicates like the record for each of these categories. So we're at 19 million shipped already. We're at 44.3 million metric tons total committed. The next closest 1 year would have been like 2020. Final sales are projected at a huge record. We're talking total export sales projections are now up to 3.2 billion. And this is where I think that we want to just be level-headed about what's possible on the balance sheet, because I still think there's a possibility that there's just not enough corn flowing with all this demand right now, but we will have enough in the end. So this is where you get to USDA final sales versus week 13. We're talking about 38 million, 36 million that we need to reach to get to that final number. Right. Last year, we had a really aggressive pace of 38 million. So I think a lot of people have last year's recency bias in mind and not thinking we might have front loaded this demand at all. And, I think that because South America has got a large safrinha crop from last year to ship still. And finally, it's not just about selling all these all this corn. It's about actually getting it shipped too. We have to basically outpace the record of last year to get to that final number. So I'm not saying these things are not possible. They're very possible, even I would say probable. But when I look at the balance sheet, and let's go to the next image, Jack. The balance sheet is a little hard to see here. This is just the USDA WASD sheet. All of this is still leading us to a 2 billion bushel carryout. We have a 600 plus million assumed feed estimate this year over year. We have exports, the numbers I just went through are quite lofty. Like we can hit them, but are we going to go and outpace them? I don't think so. And we have to remember the last stocks report, they actually lowered feed demand, right? They raised stocks because of what they attributed to a poor fourth quarter feed demand in the end of that marketing year. So to suggest that feed demand is going to be up 600 million at the highest in years, I think that's where I just want to be a little level-headed here and say the only chance or the best chance I think for a rally would be that they have to severely cut corn yield, and the market is suggesting that there's just not enough supply out there right now. But it also was suggesting that last year, before we collapsed into the summer timeframe when all that corn had to move. So if this year, if the financials are even tighter, if working capital is even lower, yeah, I think that the need to raise cash into loan renewal is probably my biggest concern for corn. And in the last couple of weeks, especially, corn has really outpaced almost every other product. It's hitting new highs against March wheat. It's doing really well on the ratio against beans. Corn's kind of the last leg standing, and that's my concern going into the new year if a lot of that starts to move.
So, you know, I'm not tinfoil hat here, Dustin, but let's say that you did get a huge slash on January 12th, and that's 181 or 182,
Yes.
which you can kind of make an argument that maybe that's what the market is kind of where it's at. I mean,
that'd be probably 350 million bushels.
So like 175 ish.
Yeah, if you just take that rate off of the WASD report and assume that demand is going to stay where it is, then yes. But I don't know how you could cut yield by 300 plus million bushels and not look at that feed number and say that looks ridiculous. The feed number looks way overstated in my opinion. But
because yeah, I mean, isn't the thought has been that production is going south of the border because the border's closed. So you know what I mean? You're robbing Peter to pay Paul a little bit there.
Right. It's still being consumed. It's under the guise of an export instead of domestic feed.
Right.
We lost a bunch of feed demand on through that July, August timeframe is what the stocks report suggests that we did. 200 million bushel swing to the upside. So I still find it like weird that there's not like a massive online discussion right now about the fact that we've got 1.5 billion bushels more than we've ever had on a balance sheet. It's like, okay, well, it's okay. We're just going to use an extra 1.1 billion in demand. Yeah, if prices are the right price, I mean, we're not going to go to $5 corn and get that extra demand, in my opinion.
That's fair. Yeah.
But they may be wrong on yield. I don't want to be like, oh, the market's wrong. Like, I don't want to say that. I just want to keep an open mind that it's like we've gone through a number of years in a row where the September contract has been the low in August. And I think it's because we've gotten very good as producers of storing corn and not selling it. Right? Like that, it's been the very last moment has been the worst price. Now there's like last year, we had really good opportunities into January, February. If you just waited, and maybe we get that again. I'm hoping we get that again this year, but I want to be skeptical about what corn risk is once it starts moving.
Sure. We've got a question. Nick asks, are we exporting this corn to past customers in higher quantities, or are these new customers? Dustin, you got some thoughts there?
Yeah, most of it's going to Mexico. And I don't know the individual customer layout, to be honest.
I think Ben, you could probably, you're more of the wily veteran here, but that's probably a much higher quantity than Mexico has historically purchased. I mean, they've been a big buyer, but like, it feels like they've been on steroids.
Yeah. That's a really positive because the previous years you could attribute that to a lot of dryness in Mexico. And that was not really the case this past year. But I think in general, we're at a really interesting spot because the trade war forced us into more corn acres and less bean acres because of uncertainty. And the world needs corn, right? If you look at really basic supply and demand charts, world corn ending stocks to usage, they haven't been this low since 2013. So we're sending corn to a lot of places in addition to Mexico. I don't know the breakdown either, but the world needs what we have. And, it's quite the opposite in soybeans where we have, 6.5% stocks to usage, but the world has plenty of soybeans. So I think the takeaway from all of this is that if we don't get some guidance soon, some positive news on RVO, on SREs, on used cooking oil, we run the risk of being in the same problem next year where producers back off of beans and they just go to corn because the demand has been so good. And, obviously in the end, profitability numbers will drive that. And I think that the linchpin to the whole thing is no 26 beans. Justin's mentioned it, Dustin mentioned it. If you have 26 beans can get some footing underneath them, new crop corn will not like that. So we really put ourselves to use Dustin's word, and I think it's perfect. We've put ourselves in a real imbalance on production from the trade war. And the risk of that going forward, every day that we go without some concrete supportive news on those things that are out there that we don't know the end game, we don't know the final decision, we don't know the plan, is going to be detrimental to this same cycle that we had in 25.
That's a good point. And I see Ryland just shaking in his chair as we're talking about his deal here. But Dan from Kansas makes a good point. The Mexican cattle can't be sent to the U.S. as they have been able to historically, and the cattle need fed. I think that's a lot of the extra demand. Ryland, why don't you chime in here?
Yeah, I mean, I don't know what else you'd do with it. I think that's been the big question mark, when this thing whole first started, was what's going to happen to all these cattle that are stuck down there, or they're not making it over the border. You're going to have to feed them at some point. You're going to have to profit off them, or at least try to. So I think that is where the extra demand really is. I think Dan's got it right.
Any other thoughts here, fellas, before we head into the weekend? And Ryland, I'll come back to you for overall market opinion. But Dustin, anything else you're looking at here as we, we're going to have a kind of an interesting week next week, kind of broken up by Christmas. And actually the next 2 weeks, really, you're broken up by Christmas, and the following week you're broken up by New Year's. So kind of just a really weird couple weeks coming up here with low volume would be my guess.
Yeah, just, weak markets has been somewhat probably currency related. The real, we were talking about trying to see if it can go above 19. It's back to 18 now, so that's definitely a headwind. And it's might be some of that positivity in the spreads too, because we compete more heavily at the back end of the market. So when it comes to futures disparities, I think that watch that closely. They're not having the best economic situation right now. There's some earthquake things happening in the bond markets with Japan. They're as Japan long-term rates start to rise, that's one thing that I think could be a negative for our side, right? Because it just sends shockwaves through our long-term debt and long-term credit. So if there's any sort of setback from that's another thing I think just to kind of keep in the back of your mind. Otherwise, I do think blue skies are ahead for future years because of inflation. I think commodity businesses will prosper. When you just look at things like gold, we haven't felt that yet, but I think we will. So.
Very good. Ryland, we'll come back to you. Sharp sell-off yesterday in cattle before kind of battling back. We got cattle on feed here at 2:00 Central, and quite the opposite for hogs. Strong start, and then they cooled off. So I guess what are your thoughts here as we go into cattle on feed and wrap up the week?
Yeah, absolutely. I mean, it just seemed kind of like, cash market just kind of trading steady. So really wasn't a whole lot of news from the South. We saw cash trade at 228 in Nebraska and Iowa on a live basis, and then, still higher on the dress, about $4 to $5 higher in the North. So it sounded like asking prices around 232, 233-ish. So we'll see if we actually see the Packer kind of come up and grab those by the end of the week. So I think you've baked in a lot of that news just in general, or at least that sentiment. Plus we're kind of going into the holiday type of trade. And I think everybody wants to see what this cattle on feed report has to say. I mean, if placements come in right as expected, I'd imagine that there's not going to be a big shift in the psychology going into next week. So that really where a lot of the focus I think is going to be going into next week. And hogs did bounce back, recover, just kind of back to the middle end of the range for the past week. You just really have gone nowhere kind of slowly, and it just seems like we're in that holiday mode. You had sharply lower bellies yesterday, down $7. You had carcass down $1, and that I think is the some of the biggest areas of support right now. So I think it's just kind of back and forth trade right now, kind of coiling action. And everybody's going to be waiting to see what the hog and pig report says on Tuesday, as well as the cold storage report. So I think that's really kind of the focus. No one wants to screw it up before the end of the year. So it just kind of feels like we're a little bit stuck in the mud.
Very good. Appreciate those comments, and we'll get cattle on feed here this afternoon. You'll have a write-up about it in the evening commentary, and I'm sure we'll talk about it Monday on the War Room. With that, we've made it through another week. It is Fun Fact Friday. Brian, what do you got for us?
Thanks, Dan. Happy Friday, everybody. And we'll stay in the holiday spirit with Christmas right around the corner with some more crazy holiday traditions. We'll start off in Japan. It's tradition to eat KFC on Christmas, thanks to a 1974 marketing campaign called, excuse my Japanese here, Kurisumaku ni wa Kantaki. It stands for Kentucky for Christmas. Instead of buckets, they buy party barrels. Sales between December 23rd and December 25th in U.S. dollars range between $40 to $60 million. I mean, that's a lot of chicken.
That's a lot of chicken.
Yeah, Colonel Sanders is basically their Santa Claus. So we'll move on. We'll move on over to Catalonia, which is in the northeast corner of Spain. Christmas tradition called Cagatillo, which stands for poop log. So starting on December 8th, families put a face on a log and cover it with a blanket, feeding it bread peels and tangerine skins. Then on Christmas Eve, kids with sticks start hitting the log, singing poop log, poop taran, which means nougat, not salty herring, because if the log is in a bad mood, it might troll you fish. And then magic, under the blanket, presents are there. So that's pretty crazy tradition, I would say.
I stroked out.
Yeah, right? So, Ryland, I can see you singing the poop log song over at Christmas. And lastly, the tradition of mistletoe comes from the Anglo-Saxons, meaning dung on a twig, because it grows from bird poop on tree branches. Nothing says like romance, like let's stand under the poop twig and kiss. So
very romantic.
Yes. So I never knew that. So we have a kind of a little bit of footage of all these traditions. Jack, if you want to show.
Pretty much what my Christmas is going to look like.
Ryland's so happy. I love that. The chicken
man.
man.
Look like me at all. It's just
you look like a chicken farmer, Ryland. That's what you look like.
Happy Friday, everybody.
That's so good. All right. Very good, bro. Thanks for that. Appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so, and it'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great weekend, and we'll talk to you again on Monday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.